Hey traders, fellow stock market lovers, and investors from around the world. It's Jeremy Alexander Newsome. I'm with Real Life Trading. I want to welcome you to 2016. Boy, oh boy, it is here, and I am pumped about it. Let me discuss a little bit about what I think about in the market, and probably sometime later this week I might do a really big picture 2016 kind of overview. But for today, why the big sell-off? Well, realistically, China and overseas did get hit pretty hard today, and really was just kind of a bloodbath in the global markets, which is going to cause America to sell off a little bit as well. This is a DIA, which is the ETF that tracks the Dow Jones. You might see a lot of lines on here. I do kind of feel like I have a lot of lines. Let me come all the way out here to a weekly chart. I'm going to do a line chart as well. And a line chart is just a chart that shows you kind of the opening and the closing prices. And notice this, well, I said opening and closing. It just shows you the closing price of the day. But notice the long-term trend of the Dow Jones. This is really, again, the ETF that tracks the Dow Jones Industrial. And you can see this long-term trend line has supported the stock for quite some time. This is kind of the general bullish angle that the market has been having. So long-term, I am still bullish in the market. I am beginning to change my long-term, and I'll probably talk about that more towards the end of this week, my long-term focus to neutral. And neutral really just simply means I'm not really actively, aggressively looking for buy low, sell high opportunities. I'm being a lot in cash. I'm going to be waiting a lot, maybe day trading or individual swing trading, just kind of getting in and out and not really actively adding to any type of long-term positions. And the reason I say neutral is because you can see how flat the Dow Jones has been really since June of 2014. We have been immaculately flat, very, very sideways. So about 6 months, 7 months or so on the Dow Jones Industrial. My thought is that the market could theoretically, the Dow could trade all the way back down to about 15,000 or so. And from there, could bounce. Will that happen? Maybe, possibly. I don't know if it will, but if it does, I will be a buyer down at that level, but that'll probably be the only buy that I do if it makes it back down to that angle. So that could happen. That would be neutral, in which case I would semi-expect the market to trade sideways for quite a while, and then maybe at some point break out in the upper range in the future. So again, here's your longer term view, something like this, and maybe something like that. That's a possibility. Otherwise, for me to be bearish long term, and by long term I mean for a year or so, just have a continual bearish outlook, I'm going to need the Dow to break below 15,000 and even retest a little bit that particular price range. So let's talk about present day Dow and present day market. So a lot of volatility. We've been mentioning and referring to a word called Chop City. And Chop City is where you just have a lot of volatility, giant 1%, 2%, 3% swings on a daily, weekly level. And that's really exactly what we've been having since October. Now, again, the long-term trend line is right there in blue, the one we're just looking at. Here's a short-term trend line, different angle, but we did trade down to that level on the Dow, and we are bouncing just a little bit. What's important to know for traders is this level down here is pretty much the same price point that we've gotten some buying before. I am slightly anticipating a potential little bounce, and now that the market 10 minutes away from closing, you have a beautiful lower shadow. I can get rid of this protective put. Most traders are triggered into that protective put. You have a nice long lower shadow, which represents buying pressure with some pretty good volume at a trend line. Here's my thought. If we close below today's candle anytime this week, it's going to be a little bit bearish, without question. This gap is what I refer to as a bearish retest gap, and the bearish retest gap will probably trade up in the next few days. So I do think the market recovers a little bit from the selling that occurred, and keyword, if it doesn't, specifically tomorrow or Wednesday, if we close below 169.21 on the DIA towards the end of the day, aka we close below about 17,000 on the Dow, I will be just a touch bearish at that particular point. But I do like the lower shadow. We do have some buying pressure coming in, and believe it or not, I'm not as bearish as a lot of people think I might be. Down at these levels, these are pretty much approximately where some people were buying last time, back at this $200 price range. You can see people are buying there, people are buying there, people are buying there. And honestly, I think this is kind of a trapping day. Giant bearish gap down. Every time the market has broken lower and made some lower lows, back here, back here, back here. It's had a giant rally. So it's just very, very choppy. Incredible for day traders. A little aggressively forceful for swing traders. So swing trading is definitely taking its toll. But regardless, if you're a younger trader, and by younger, I'm just going to say 40 or under, buy whatever dips you get as much as you can whenever you're longer term invested. And again, that's coming from someone who does not have a license to give you guys specific information about investing. I'm just letting you guys know what I look at the chart. I'm not as bearish as you might think. However, the fact that we're breaking below this support, we do have a little bit of a bullish candle coming in. Let's find out what happens in the next 2 to 3 days, because that will be the telling sign. If we trade back up and fill this gap, we're likely going to do what we have been doing for a very, very long time, which is trade up. Everyone thinks that we're going to go bullish, and then we probably roll over again, and then this is the time everyone goes bearish, and then we bounce. Instead of doing that, instead of letting emotions control where you are trading, understand, sell high, buy low. It's the exact opposite of buy low, sell high. So if you're selling up into this resistance and you're buying into this resistance, into that support, beautiful. We'll continue to wait to see exactly what happens and exactly what transpires, but that is a little bit about what's happening in the general market. Bottom line, I'm a little bit more neutral. Going into the end of 2016, a lot of the other investors are, but any dips that occur, I will be looking to buy them, especially if it's a longer term dip on the Dow or the SPY. Let's talk Apple. Hopping over here to Apple, and if you're thinking, Jeremy, are you eating a covered apple? Mustard covered apple? Yeah, I will. It'll happen this week. You guys will get that get that video here soon. So Apple gapped down today, along with the rest of the market. Has a big, nice white candle coming in. What's going to be happening at this particular point in time? Well, here was really kind of my analysis, and I'll read what we have been looking at on Apple. This was my analysis from really Thursday. Apple might bounce Monday. If it doesn't, I really think today is the catalyst for some lower lows. Looking bearish unless Monday and Tuesday is bullish, which today wasn't. A close below 105.90 would be a strong sign. So we did close below 105.90 on Thursday. I'll be prepared to unravel my bull put spread next week if needed, and likely get into another bear call spread. So a lot of you are familiar that on Apple I have the Iron Condor 125, 130, 105, 100, and we did get into that level today. What I'm anticipating is something like this, looking to exit around 106, 107 on Apple on the retest, and then I probably will potentially play Apple a little bit bearish, at least based on my analysis. Could we go bounce? Could this be a bouncing candle on Apple? Could this be the low that happens until earnings? Absolutely, but I don't think so. I mean, again, this 106 support really was quite strong. The fact that we broke it at this juncture is more than about just being accountable. It's about following through our trades and not losing a lot of money. So I'm gonna see what's happening here. We did not trade Apple bearish today. In fact, all day we did not place one trade in the morning trading room, which is great. As bearish as today was, a lot of people thought, man, Jerry, you must have made a killing. Well, we did well on some swing trades we were already in, but the thing was, so many stocks gapped down so far today. The move had already been made after hours, and so we didn't really get a chance to do a lot of trading today. So we didn't take one trade in the room, which is fantastic, right? Sometimes the best trade is no trade at all. It's just something to keep in mind and just understand. So regardless, anyway, on Apple, looking for a pullback or a retest into 106, 107, and I'm looking to short it. We'll see exactly if that plays out, and if it does, that will be an unravel of the 105, 100 bull put spread. But if Apple does not roll over and does in fact continue a little bit lower, if it does not roll over and goes higher, great, awesome. We've got plenty of time left on this bull put spread. Let's see what happens. Let's check out Amazon. Amazon, actually a really, really interesting analysis setup candle pattern thing here on Amazon. So you are all very familiar that in 2015, I'll say the same thing in 2016, all-time high breakouts are probably going to be absolutely horrendous. We had an all-time high breakout on the 29th of December, one of the last days of the year on Amazon. It was a bullish retest gap, right? White candle, gapped up, broke out the all-time high. Very, very weak signal in my opinion. And that was the day that I actually bought to close this put sale on Amazon. It was a 590 January put sale. If you still have that open, I still think you should be okay on it. I don't think you're going to get put to stock on Amazon, but I did buy to close, and I did save that. I just don't think that TradingView, as you guys probably saw earlier, has had a few small glitches. But anyway, That's something to write down for 2016. All-time high breakouts, very, very weak. We got an evening star reversal pattern right there. We have a gap up and a gap down right there. Could that be a small island reversal? And I'm not going to say no. I actually am slightly, at this point, going to be a tad more bearish on Amazon than bullish. I would like to buy it. I have no problem buying Amazon, but this is a bearish retest gap. I do expect some retest, and if we do roll over, I'm looking for Amazon to pull back into the 100 simple moving average. So again, nice little bearish gap, possible island reversal, great volume today, and nice little candle as well. So people, I think, are trapped. I do think Amazon pulls back a little bit. Brian Bowden, another trader who lives in Nashville that I met, Bhavani, they had a bear call spread on Amazon, so that one looks pretty smooth at this particular point in time. But yes, let Amazon pull back a little bit farther and maybe into the 600, 595 range, and then likely probably look to buy it off of the 100 simple moving average. But I am just slightly bearish on Amazon. Google, ticker symbol GOOGL, almost identical analysis on Google. So we had an all-time high breakout on the 29th of December. This was a bullish retest gap, right? Closed above the resistance. Got a little bit of an evening star reversal pattern. Had a gap up, and we have a gap down. Could be a slightly very, I wouldn't say the most massive island reversal of all time, but it's just a little bit bearish. It probably have the very similar sentiment as back there, and a lot of people thought that was an island, and I also called the same thing. It did get some selling for sure. I think some selling could come in, maybe get a little bit of a white candle, a retest, and then we roll back down. But again, the 100 simple moving averages on a lot of the big tech stocks, I think that's where I'm going to be a little bit bullish. Brian Bodie is in the 725, 720 bull put spread on Google, expiring this Friday, if I'm not mistaken. And 725 is right about here. So he's got a ways to go on that one. His stop is going to be at 730. So I like a little bit of a lower wick today on Google. Just going to be keeping a close eye on it and see what happens. Netflix had a phenomenally strong bearish gap today and then ended with a nice little hammer candle. I'm really excited about this because that's exactly what we talked about today on the markets in the morning trading room. Mentioned huge gap down, folks. There's going to be a lot of people freaking out today. Do not be short, at least at this point. Wait a little bit. Wait for a lot of lower shadows to come in, and that's exactly what happened. A lot of lower shadows coming in on the market. Netflix got a nice little hammer. This is, again, kind of a bearish gap. Not going to deny that, but you're going to get some support from this 200, and you're going to get some support from this trend line. Notice this little trend line coming in here right there. Again, really tomorrow afternoon and Wednesday, it's going to be a little bit of a telltale sign of what's going to happen, but I do think based on the volume and the close and a lot of candles, we move a little bit higher in the markets this week, really. So if you're looking at bull put spreads or put sales, very short term, maybe some call options, again, very short term, I'm okay with that. The only way I would not be okay with that is if we open up tomorrow, trade down, and close below the low of today. The low of the day today is really going to be the catalyst. And I think we move higher at least tomorrow, Wednesday, Thursday. Maybe something crazy happened on Friday. I'm not sure. But regardless, maybe some bull put spreads down here on Netflix. The trend is still bullish on a primary level, and it's just really kind of smacked out in the middle of resistance and support. So if Netflix on a longer term level ever makes it back down to $87, $86, I think that'd be a great buy low, sell high opportunity. It's right smack dab in the middle of the big channel with a small trend line kind of supporting it from there. Here's Tesla, ticker symbol TSLA. Tesla had a little bit of a bearish gap today. And I'm going to turn the long-term moving averages off on Tesla and just kind of let you look at this little triangle-looking thing that I have in here. Long-term trend line from very far away. So here's your weekly chart on Tesla. Nice long lower shadow. Nice long trend line coming in here. Got some really good bounces off of that. So today's gap, this is the exact analysis that I had this morning. Tesla, nice bearish gap and go, but not clearing any pivots. Edge is bearish, but I'll wait to see if there's any other trades out there. So we recognize it was a very good gap. It was a gap and go. Just simply didn't trade Tesla today. Again, didn't get into any trades at all today. But Eric, one of the good buddies I've been chatting with a lot lately, is in a Jade Lizard, as it's referred to, 245, 250 bear call spread and 190 naked put. 190 is way down here, 245, 240 bear call spread. That one's looking good today after the gap down. Really, I kind of anticipate Tesla just kind of hang out, trade sideways, a little bit and just kind of consolidate in this period. Because again, this is a long-term trend line. I don't expect anything fantastically weird to happen on Tesla. Probably just hang out, do something like this really for the next few weeks. So if you're trading Tesla, be a little bit neutral, maybe with a dash of bearishness based on today's gap and volume. Last but not least is Facebook for today. Facebook, gorgeous little lower shadow today. I do think today could be and likely is the end of the wave 4. I did talk about some put sales today, but for some reason TradingView decided not to update that. We've been doing a lot of put sales on Facebook for a while. This was the 95 put sale for January, and that was $1.13 limit earlier this morning. I think that this is possibly a wave 4 on Facebook. Nice little move down. Nice little hammer candle kind of coming in. You got a support at $98.68. Here's the long-term moving averages on Facebook, and the 100s right at that old resistance, new support. So this is a bearish retest gap. Looking and expecting for a little bit of a gap fill, mostly just kind of a sideways to kind of a congested sideways range on Facebook. But overall in 2016, still another stock that I'm keeping a very close eye on. It could continue a little bit higher. So, ladies and gentlemen, going to be a very, very interesting year. I might do some really big picture stuff later in the week or maybe next week some point. But had an amazing experience in the morning trading room. Thanks for everyone who was there. If you're not there and you want to be there, you still absolutely have time. There's 4 days left this week, Tuesday, Wednesday, Thursday, Friday. Make sure to email me if you have any questions or want the links, or you want the links for your friends. Hey, this is open for the world. Excited. We'll see you guys Wednesday in the next Real Life Stock Review. And until then, remember, love life, live life, and trade. See you.